Hello listeners, today we will study International Monetary Fund. What is International Monetary Fund? World War II had its adverse effect on the global economy. To remedy the situation, an international monetary conference was convened in July 1944 at Bretton Woods in America. It was attended by the representatives of 44 countries. India also participated therein. It was decided in this conference that two institutions be set up for the economic development of all countries. First, International Monetary Fund, and second, International Bank for Reconstruction and Development, or we can say World Bank. Consequently, International Monetary Fund was founded on 27 December 1945. It began functioning with effect from 1st March 1947. The fund was established with the objective of solving the problem of balanced growth of world trade, international monetary cooperation, and the balance of payment of member countries and their temporarily disequilibrium. Now we study the objective of International Monetary Fund. The fund has the following objectives. First, international monetary cooperation. The main objective of the fund is to promote monetary cooperation among the different countries of the world. It will provide the machinery for consultation and collaboration to solve international monetary problems. Second, multilateral payments and development of trade. The fund has at aims at providing and establishing multilateral payment and trade system in place of bilateral agreements. Third, stability in the rate of exchange. It will endeavor to stabilize the exchange rate of member countries. This objective has since been modified. Fourth, abolition of exchange restrictions. It will try to remove all restrictions and controls on foreign exchange imposed by member countries. Help in international payment. It will lend or sell to its member countries currencies of other countries. This facilitates foreign exchange transactions among the members. Sixth, aid to member during emergency. The fund aims at providing short-term monetary help to member countries during emergency. Seventh, reduction in the disequilibrium in international balance of payments. The fund is also to provide monetary help to member countries in order to shorten the duration or lessen the degree of disequilibrium in their international balance of payments. Eighth, profitable investment of capital. Another objective of the fund is to help the member countries invest their long-term funds in profitable activities. It provides special help to rich countries to invest their capital in poor countries. Ninth, help in balanced economic development. The fund is also to facilitate the expansion and balanced growth of international trade and to contribute thereby to the promotion and maintenance of high levels of employment and real income of member countries. Now we will study membership of IMF. There are two types of members of the fund. First, original members, and second, ordinary members. All those countries whose representatives took part in Bretton Woods conference and who agreed to be the member of the fund prior to 31st December 1945 are called the original members of the fund. All those who became its members subsequently are called ordinary members. Any country can cease to be its member after giving a notice in writing to that effect. Fund can terminate the membership of such a country as does not observe its rules. In 1947, the number of member countries was 40, and now there are 189 countries as its members. Now we will study organization and management. In order to manage the fund, the following administrative boards have been set up. First, Board of Governors. Second, Board of Directors. Board of Governors. It consists of one governor and an alternate governor for each member country. It meets once a year. It frames the policies of the funds. And Board of Directors. It conducts day to day affairs of the fund. It consists of 24 directors, 6 of whom are permanent director and other temporary directors. Permanent directors belong to those countries that have a largest quota in the fund. Currently, these countries are United States, Britain, France, Germany, Japan, Italy, and Canada. 14 other directors are elected by other member countries. India is one of the elected directors. The managing director may appoint 3 deputy managing directors instead of one with effect from June 1994. The main functions of the fund. From the above given brief account of the fund, it can be seen that fund perform several major functions. Fund deals only with the central bank or the government of the country. It has no right to interfere with the economies of the member countries. Main functions of fund are enumerated below. However, some of these functions are being modified. First, determination of the rate of exchange by every country. When a country becomes member of the fund, it has to declare par value of its currency in terms of dollar or gold. This facilitates multilateral convertibility of that currency. Second, loan of foreign currency. If a country has an adverse balance of payment, the fund gives foreign currency required by the said country on loan at a fixed rate of exchange. It enables the country to discharge its foreign liability. Such loans are of short duration. Third, restrictions on foreign currency. The fund buys and sells the currencies of the member countries. Whenever a country buys the currency of another country from the fund, the latter makes it available by purchasing the same from the country concerned, of which it constitutes a national currency. However, in any 1 year, a member country can purchase from the fund foreign currency up to the maximum of 15% of its quota. Fourth, Bank of Central Banks. The fund is called the Bank of the Central Banks of different countries of the world. Just as the central bank hold the cash reserve of the commercial banks of the country, likewise IMF also mobilizes resources of the central banks of the member countries. Fifth, technical assistance. The fund also provides technical assistance to its member countries. The fund sends its experts on deputation to member countries to advise them on matters like exchange control, foreign payment, credit money, central banking, and economic policy, etc. The fund also publishes many technical journals and magazines. Sixth function, training. It also imparts short term training courses to the representatives of member countries. This training is imparted to the senior officers of the central banks and finance department. In 1975, a training center was set up. Seventh, facilities during emergency. Although IMF is opposed to any sort of controls either on the foreign exchange or foreign trade, yet member countries have been given the right to resort to those controls during emergency in the hope that they will lift it as early as the situation warranted. Eighth, it serves as a short-term credit institution. The fund removes temporary difficulty of adverse balance of payment of any member country. It is a second line of defense. It means that the member country will maintain its separate foreign exchange reserve and the payments will be met out of these first and the balance will be given by the fund. Ninth, the fund provides a mechanism for improving short-term balance of payment position. For this purpose, its rules provide for orderly adjustment of exchange. A country can alter its rate of exchange when it feels that its rate of exchange is out of the line with its economy, but this alteration can be made after the due deliberations with the authorities of the fund. Tenth function, The fund provides machinery for international consultations. The fund has provided the excellent opportunity to the principal countries to sit together and reconcile their conflicting claims. 11th, the fund promotes exchange stability by promoting orderly adjustment of exchange rates. 12th, it provides the services of technical experts to member countries to solve their balance of payment problem and other related matters. Thus, the fund performs financial, supervisory and controlling function. Now, we will study the benefits of IMF to Indian economy as advantage to India of the membership of IMF. India has enjoyed the following benefit from the membership of IMF. First, facility of foreign exchange. Membership of the fund has enabled India to get foreign currencies from the IMF as per its requirements. As a result, India can import capital goods from abroad for its economic development and can also meet its balance of payment deficit. Second, freedom from sterling. Prior to its membership of the fund, Indian rupee was convertible into other currencies through the medium of sterling. With the fixation of par value of the rupee in gold, Indian currency is now freely convertible into any other currency. Third, membership of the World Bank. By virtue of its membership of the fund, India has also become member of the World Bank. India has secured several loans from this bank for its economic development. Fourth, sale and purchase of foreign exchange. Fund has entrusted the sale and purchase of foreign exchange worth more than rupees 2 lakh to Reserve Bank of India. The latter cannot enter into any transaction of foreign exchange that is for the value of less than rupees 2 lakh. Fifth, importance of India in international sector. India was among those five nations who were the permanent members of the board of directors. By virtue of its status, India used to play significant role in the policy making of the fund. It very much enhanced the prestige of India in international sphere. Currently, India is an elected member in place of permanent member of the fund. Economic consultation. In the financial management of 5-year plans, the fund has given valuable advice to Government of India from time to time. Many economic missions were sent to India by the fund to suggest measures for its economic development. Seventh, help during emergency. India got a lot of financial assistance from the fund to tide over economic crises arising out of natural calamities like floods, earthquake, famines, etc. and at the time of Chinese and Pakistani aggression. In order to meet its balance of trade deficit in the wake of hike in the oil prices, India secured in 1979 a loan amounting to SDR 2025 lakh out of oil facility. In 1991, the fund sanctioned a loan of $5,000 crore to India. These loans were to be given over a period of 3 years. India actually utilized till January 2000 loans amounting to $4,070 crore. Subsequently, India decided not to utilize the remaining part of the sanctioned loan. Eighth, help for 5-year plans. India received many loans from the fund during the second plan. It received foreign assistance to tune of $127 crore during this plan. India devalued its rupee at instance of the fund during the third plan. In August 1980, under compensatory financing facility, India was sanctioned an amount of $283 crore by the fund. India is among those 69 underdeveloped countries that are entitled to receive fund from subsidy account by way of supplementary assistance at a nominal rate of 3% annually. Ninth, special drawing rights. India's quota of SDR was raised from 14 crore to 114.5 crore in 1980. Till January 2000, India was given SDR 68 crore. However, India's share in the total world quota has gone down from 3.2% to 2.35%. 10th, profit from sale of gold. By the end of 1980, IMF sold 200 lakh oz of gold. Profit out of this sale was to be distributed among the developed countries. India got its share of profit amounting to rupees 127 crore dollar. Beside, India also got 8 lakh of gold at the rate of dollar 35. Thus, by virtue of being the member of IMF, there has been an increase in the stock of gold of India. Help in foreign exchange crisis. In 1991, India had to face foreign exchange crisis. Its foreign exchange reserves in 1990-91 had fallen to rupees 4,388 crore. India was in dire need of foreign exchange. To tide over this crisis, in 1992-93, India secured loan of worth 480 crore dollar, and in 1993 another loan worth rupees 500 crore SDR. Since the foreign exchange crisis has been over, no new loan is being sought by India from IMF. In short, India has gained in many ways by being a member of IMF. Example, Indian rupee has become an independent currency for international payments. India has received help to correct its balance of payment disequilibrium. On account of its membership of the fund, India has also become a member of the World Bank. As a result, India has received large economic assistance. India has also received technical assistance from the fund. India is always confident of receiving necessary assistance from the fund in event of any emergency. India has a key role in policy making of the fund. Consequently, India has an important place in international economic field. India is also a member of committee of 20 member countries. Thank you.